What if I told you that by investing just $24 a week for the last 10 years, you'd be a multi-millionaire? You wouldn't believe me, right? But that's only because everything you've been told about retirement is completely outdated. While most people still trust Wall Street advisors, retirement funds, and the same broken system that's losing to inflation, my guest today is showing Americans how to take full control of their financial future using crypto. Chris Kline is the co-founder of BitcoinIRA, the first and largest crypto retirement platform in the US. Under Chris's leadership, BitcoinIRA has grown into a multi-billion-dollar platform trusted by clients in all 50 states. What he shares today is a total mindset shift.
Once you take that orange pill, it changes you, right? It changes you. It makes you think about the world a little bit differently. It makes you realize what's the Federal Reserve, what's monetary policy, what's fiat currency.
Most people view Bitcoin as a short-term trade, but Chris sees it as something far bigger, a hard money revolution baked into your long-term portfolio.
We need to take humans out of monetary policy, and Bitcoin does that.
And if you understand that shift, that we're moving from the he who holds the gold to something new, you start to see where this is all going.
He who holds the gold makes the rules, and now it's going to be he who holds the Bitcoin makes the rules.
Most people think they're too late to the Bitcoin opportunity, but let's put this into perspective.
So if you put 10K in every year for the last 10 years into Bitcoin, and you would have the equivalent of 67.5 Bitcoin today, which is just about, it's just basically $8 million is where you'd be sitting at right now.
$8 million from about $190 a week. With some quick math, that's $1 million from just $24 a week. Basically, a cup of coffee a day, guys. Tell me what else on the planet can do that? That's the power of investing into the hardest money we've ever seen. It's what happens when scarcity meets time. And in this episode, we're breaking down how to harness it. If you're serious about achieving financial freedom, guys, and I hope all of you are, this episode is one that you can't afford to miss. Chris drops a masterclass on building wealth with crypto for the long game. And stay tuned, guys, because near the end, he shares a few alpha plays that nobody is talking about.
You were going to ask me for a little bit of alpha that nobody knows about, so I've got a couple of things.
Without further ado, guys, let's bring Chris onto the show. All right, Chris, welcome back to the show. It's good to have you here. Last time we had you on, we had quite a good response, and bringing you back to talk about, retiring, using Bitcoin. This is literally, what I was able to do. I didn't have a fancy retirement vehicle to put it in. I hadn't even started planning my retirement, but Bitcoin was the tool that enabled me to become financially free. And, even though I'm still working, I was able to kind of retire myself. And also my mother was able to do it. Last time on the show, we talked about my mom's personal story, how she rolled that Roth IRA into Bitcoin in 2015. And so the question is, and I think if I did the math, I guess it depends on when you put in 2015, but if you were to put like $10,000 into Bitcoin in 2015, where would it be sitting today? And then what does this tell us about the opportunity that people who are watching this now, who maybe haven't made that jump yet, or even if they have, if they were to start focusing on retirement now, what opportunities that lay out for them?
Yeah, so I did run the math for us, Kyle, just so you know. I did check it for us. What I did was I did today. I did September 18th, or like mid-September, basically.
Okay.
And I put 10K in every year for the last 10 years into Bitcoin. And you would have the equivalent of 67.5 Bitcoin today, which is just about, it's just basically $8 million is where you'd be sitting at right now.
Not bad.
Not bad. Now, what does that mean about the opportunity right now? So,
Right.
I constantly hear this of, oh, I'm too late for Bitcoin, or, in my policy, you're never too late. You're never too early. It's all about dollar cost averaging your way in. And once you decide to come in, you keep aggregating that asset as much as you can, whether it's $7,500 a year in your contribution or rolling over or mega backdoor Roth. So we're going to talk about a little bit later. Like those are all the things that you can do to build up stacking those sats, as we talk about. And it's never too late to get into the space.
Yeah. So that opportunity from 2015 until now, depending on what time in 2015, but it was about 100x returns from then till now. Do you think that over the next 10, 20 years, we have that kind of possibility still with Bitcoin?
I think you have 10x by 2030. I think that we're sitting about 117, 118. You'll be over $1 million by the end of 2030. Then you have another halving event, which every halving event is a different cycle, right? So it always keeps changing. To get to 100x, you might need to look at like a blended approach. There are other cryptos beyond Bitcoin that can help you get to that 100x or 150x style. But once you get to $1 million Bitcoin, how fast is it to $5 million Bitcoin, $10 million Bitcoin, right? I mean, let's think about where we were. When I was doing the math on the 2015 to here, just a couple years ago, we were struggling at $16,000 Bitcoin and where we're at today. And the first year, 2015, it was a $250 Bitcoin. And remember, we're in a life of scarcity. This is a scarce asset that we've never felt before as our generation, of something that there's only so much of it. And I think that makes the difference when you look at what the cycles can be.
Right. Last time you were on, you were talking about this killer monetary history pitch that you used to orange pill, no coiners, but we ran out of time on that last interview and you weren't able to tell us about it. Can you tell us about it now?
Yeah, so actually, I've evolved it since our last call together, because I learned some things that I wish I would have known earlier, and I should have, because I was in AP US History. The day the towers fell, I was actually taking my AP US History exam back way long ago. It was 20 some years ago, and my specialty at the time, because if you ever done AP, they give you a series of years, and it was the antebellum reform from 1820 to 1861. And actually, that's the beginning of my story now, because I think a lot of people don't know that when we were at the Civil War in the 1860s, which is just so many years away, that we'll hit the 200-year anniversary of that, the country was so divided. It was also fragmented. So individual states were issuing money. They were so New York had $1, Virginia had $1. South Carolina had all the states had their own money, and one of the things that happened from the antebellums through the Civil War and then in post-war Reconstruction was we moved to a universal dollar, and it was a very difficult thing for us to get through every state, every Congress, because we were also making all the other changes that came post-Civil War. But what the goal was, we need to have unification, and the unification was, okay, we have $1 and it's the United States dollar. And that was for about 40 years through the Gilded Age and the Industrial Revolution, that kind of held supreme. What happened after the turn of the century into the 1900s was first the advent of the Federal Reserve, which we both know has been on the minds of almost every American for the last 48 to 72 hours, right? What is the Federal Reserve doing? How are we making these decisions? What rates are going to be? That was the advent of it in the right before the First World War. And so that's kind of like a big milestone. So now you have, so just under 200 years ago, we're sitting here and we're displaced. And all of a sudden we're now going to have one unified dollar. And then just a short 40, 50 years later, now it's controlled by a unified body. That's what the Federal Reserve is all about. Issues money, issues monetary policy. Within about 20 years of that, FDR was facing the worst economic situation of our lifetime, where we were in the midst of a Great Depression, sorry. And the first thing he did in 1933 was he confiscated gold. He made it illegal to own gold in 1933. And it was an executive order, which meant that everybody had to give their gold up and take those dollars. So we went from fragmented dollars to everybody has the same dollar to there's no alternative to the dollar. It's gold. You cannot have gold. You need to have the dollar. And so you had to convert your gold into dollars to help basically fund the New Deal to get us through the Depression. After that, we had what I call the military industrial complex, which we actually still have today, which went from World War II on was the reason why our economy has been growing is we start wars or we're in wars, whatever it might be. We're in war. And that means we have to build planes and submarines and Navy ships and rockets and bombs and everything else, which that creates an economy that never existed before. And we've been living with that for up until 1940s till now. We still live with it today. What changed? So you go from fragmented, universal, and now we're funding the strength of our dollar through military conflict. The third piece, which is a piece that a lot of people missed because it's not a big headline, was the Nixon shock in 1971, where we basically said, okay, we took all the gold and now you can't have gold, but we're gonna say every dollar we issue is going to be backed by gold inside the Federal Reserve or Fort Knox. And in 1971, Nixon, along with Congress and everybody else, it wasn't just him, but it's called the Nixon shock, said, we don't have enough gold for the number of dollars we've created since the 1940s, 1930s. And so he did what's called the Nixon shock. He took us off the gold standard, meaning you could no longer convert your dollars into gold or vice versa. There was not an interchangeable factor. And this wasn't just for you and me as a regular Joe. This was for giant sovereign nations where we were holding their gold or they were holding gold and we were holding their debts and vice versa, right? That was the play that happened. And ever since then, we've now been in what's called the fiat currency, where we continue to create money basically out of thin air, because somebody at the Federal Reserve or the Treasury says, hey, we got to make more money because we have to fund COVID. We have to fund stimulus at post 9/11. We have to fund all these things. We have to stimulate this economy. So let's just keep pumping money in. So we went from 200 years ago where we didn't even have a dollar to we turn around and we now have a dollar, but now it's got to be constrained by a non-backing by gold, or gold is owned only by the state, to even the state doesn't have enough gold. And now here's where we stand. And to me, that is a great explanation of why we need to take humans out of monetary policy. And Bitcoin does that. Bitcoin is a decentralized system based upon blockchain and algorithms and math that is consensus driven, that doesn't require us to think about what is Jerome Powell going to say tomorrow about interest rates. And there was some really good, I hope you talked about this on the call on Friday. There was some really good context about the fact that even the Federal Reserve doesn't agree. There was one guy that said, or gal, we don't know who, said, let's hike rates. And then there were 6 that said, okay, let's go down 25 bips. And there was another 2 that said, wait, we have to we're taking the human element out of so many things nowadays. I would say the best thing we can do is take the human element out of monetary policy. And here's the good news. We already did it in 2009 with Bitcoin. That's the future.
I agree. That's the history of money for sure, right there, basically. And so with that being said, where do you imagine what do you imagine Bitcoin's role as in the next 10, 20 years? Does it replace fiat? Is it just another commodity like gold, just digital gold that exists along with fiat? Where do you think it's going to happen?
I think we're going to go through those years from 1933 through 71, where if he who holds the gold makes the rules, and now it's going to be he who holds the Bitcoin makes the rules. And that's why you see countries racing to reserve. We talked about this on our last show together. It was this race to reserve. If the U.S. holds X number of Bitcoin versus China versus Russia versus the euro, etc., having more Bitcoin makes your currency more powerful. And I think that we're going to have in the middle of that, we're going to have hyperinflationary elements that take place. And I don't mean to scare people right now. This isn't a scare tactic. This is reality. We have been pumping so much monetary supply into this economy, not just us, but everybody else across the globe has been doing this. And there's a day where values of assets go up, right? So we've been seeing real estate go up, we've seen cost of goods go up, all these things go up. And then there's a moment where everybody realizes that the dollar is about as useless as toilet paper. And this happened in 1929 Weimar Republic and other places. And it happens fast. And at that moment is where you're going to say, okay, who has all the Bitcoin? Who has all the crypto? Who has all the finite assets? And gold will still be a play in that entire concept. That's where I think we're headed for the next 20 to 30, maybe 40 years. After that, who knows what will happen? I won't be around for it. I don't think you will be. I mean, we only got about 40, 50 years left together, right? And then what will happen after that is, will they take us, will another Nixon 2.0 take us off the Bitcoin standard because they move into another necessity to print more money to inject money into an economy that needs money to keep growing.
Right. Okay, so let's get back to the kind of topic at hand, which is, the different ways that folks can look at retirement, financial freedom, and so a regular Roth IRA allows you to do $7,000 a year, essentially, right? What is you mentioned earlier, but what is this mega backdoor Roth?
So mega backdoor Roths are, and I've seen this used, and it's actually several different derivatives. Sometimes it's somebody that has a old 401k or an IRA that's stacked up a lot of amounts, but it's in a pre-tax setting. So it means you got the advantage of a traditional or other derivative of that pre-tax money, and now you want to turn it into post-tax money. And so what I've seen people do over the years is, okay, I have $100,000 in my 401k. I've just rolled it over to a Bitcoin IRA. And in certain timings, whether it works for their tax reasons or if the market's down. So those years, we were looking at those years where I was like, oh, well, when Bitcoin was at 10,000, this is a great time to do it. They will do what's known as a conversion. So they're going to convert the traditional to a Roth. And so that means you're not actually putting the money into a Roth. You're taking money that is traditional and you're flipping it into a Roth setting. Now, there's a tax implication at that moment. The conversion, the fiscal year you do the conversion, you're going to have a tax implication. And what people do with these megas is they're timing, okay, I didn't make a lot of money this year. So it was COVID years. Maybe you didn't make any money. Some people lost their jobs and didn't make any money. Great year to do that because you can take that 100 grand, convert it, and you're going to have pretty much the same tax basis as you would if you didn't do that. I see also people do this in their later years, 65 plus. As a married couple, you have upwards of almost like $96,000 that you can distribute tax-free. So if you take that 100,000 and converted it, which is a distribution, you're taking it from traditional to Roth. Now you've done that without any tax implications. So why do they do this, Kyle? That's a really good question. Roths are tax-free growth, tax-free distribution down the road. So if you can, whenever you can time it, and everybody's situation is unique, whenever you can time maximizing going to a Roth, if you can't do it at the beginning, which either you didn't do it or you can't do it now because you make too much money, that's exactly how a mega backdoor Roth works, is use the funds you have now, convert them into something at the right time in the right situation for you, and now you've eliminated future taxes for your gains and for your distributions. Does that make sense?
Yeah, that makes sense. So is this something like these kind of strategies and things that you guys, help out people who are, who would give you guys a call and kind of say, hey, I don't really know what to do, but, I want to start planning my retirement and I want to start, using my retirement to buy Bitcoin and things like that?
Absolutely. The mega backdoor Roth is a little bit unique. So we would often tell you to either consult with a tax attorney or a CPA before you do it, because everybody's situation is unique. But when it comes to just basically saving for your retirement in crypto, that's what we're here for. We help people. Our mission is to help more Americans retire. And we like to do that via new contributions. So every year you get to put up $7,500 if you're under 50, $8,000 now if you're over 50, that you could contribute to your IRA. Folks do that commonly, and they put it right into Bitcoin or other cryptocurrencies. And then you have folks that have old 401ks they left behind, transfers of existing IRAs that are looking to diversify, especially with the changing monetary policy and the changing economy short term that we have. And that's our specialty, is helping folks do that. And we don't do it with robots. That's my favorite thing. We do it with real people, real crypto. And so, yes, you can actually call us. The number is 877-936-7175. And you can have somebody on the phone within about 90 seconds to talk to you about, here's my situation, here's what I'm thinking about doing. And we can tell you after we're 10, 11 years into this of what other folks are up to and guide you along the way.
And then it's not just Bitcoin, right? There's all kinds of different assets that you guys do.
We have 80 plus, I think 85 cryptocurrencies now. So we obviously have Bitcoin, which is the supreme, but we've got the blue chips like Ethereum, XRP, Litecoin. I'm a big fan of Chainlink. Ondo's doing well, etc. Sui's out there. I know you're a big fan of Sui. I have some news to tell you about with Sui, by the way, from us. We'll wait till the end so that people are excited about it.
Okay.
But I watched your X, your Twitter and X, and I think I've seen some posts from you about Sui.
A lot.
But yeah, there's 80 plus different cryptocurrencies available today. So while we're called Bitcoin IRA, that's because we're so OG. We've been around since it was only Bitcoin, and now we've got all these other assets available.
So what is the biggest mistake that you see people make when they try to navigate the space on their own, or even people have come to you early, and how can they avoid those mistakes?
I think the biggest thing for me is when in doubt, zoom out. I've been in this for just over a decade. I've seen the bulls, I've seen the bears, and I see panic selling. I see a lot of buy at the top, sell at the low. And I think what you have to do is do your best to take the emotion out of it. And that's good with dollar cost averaging is the best solution. So whether it's the $8,000 you're going to do this year, or if you're going to do a mega backdoor Roth and put $100,000 in, you have to buy it all your crypto on that day. You can spread it out across time, which is very helpful when you're looking at the volatility of the space. The other thing I would probably put out there in terms of crypto, mainstream media is probably not your best source for authoritative information. Mm-hmm. Guys like you, Kyle, and others that I've spoke with, like Anthony Pompliano and the guys that Discover Crypto and all these other places, that's where you're going to get the best amount of news. And if you don't have X or Twitter downloaded on your phone and you want to be in crypto, you probably should do that as a first step, because you're going to get information and news. While albeit there's a lot of noise, you're going to get more news and information than you'll ever get out of mainstream media. Mainstream media has pretty much the last decade of my life been Bitcoin's dead, Bitcoin's dead, Bitcoin's dead. And then all of a sudden ETFs and everybody loves Bitcoin. And that's really hard to make financial decisions when you've got a very narrow scope of narration there. So make sure you're getting information from multiple sources, dollar cost average, and do your best to take the emotion out of it. I think that's probably the biggest thing is when in doubt, zoom out.
Yeah, makes sense. And so I don't know exactly the demographic of people watching my channel, but I think that a lot of them are maybe independent. They don't do retirement. I think a lot of them also have retirement accounts set up through their employers and things like that too. But I think a lot of also independent contractors, a lot of self-employed people that are retired, people that haven't even allocated any money to a retirement account. So, and then also, I'm also curious about, do you guys work with people who are outside or not Americans as well? But the question is, who is an ideal client for you guys, and who can come to you guys, and also, the benefits of doing it through you as well?
Yeah, so I would say, obviously, we're U.S. based. The only place in the world that IRAs exist is the United States. There's retirement savings plans, RSPs in Canada, UK, Euro, and there are other derivatives of retirement savings in other countries. But IRAs are strictly a U.S. thing that started in the 1970s. Oddly enough, in the 1970s, they took away the dollar denominated gold unit and they gave us retirement accounts. So it's kind of a fun little irony there. That's like the geographic nature of it. Beyond that, one of the things I love about being in crypto is that there's no ideal client. I've got from my daughter I guess she was born in 2014. So she's a Gen Z, maybe Gen Alpha. So
I have no idea about those things.
I don't even know these anymore. But so she's a retirement holder with a Roth at Bitcoin IRA because she's earned income over her years in her lifetime. All the way to my father and my grandfather before he passed away were clients of ours. So age is not a number here. Age it works for everybody. After age, it really comes down to. I love how you say independence. I think that's a big thing is once you take that orange pill. I saw this tweet the other day. It was like, once you take that orange pill, it changes you, right? It changes you. It makes you think about the world a little bit differently. It makes you realize what's the Federal Reserve, what's monetary policy, what's fiat currency. Having a little bit more financial literacy comes along with being a Bitcoiner, in my opinion. So, but I've seen, from men to women, there's no race, creed, or otherwise that there's none of that exists in Bitcoin. That's one of the things I love the most about it. So if you're young and you're just starting retirement, we're a great place, because if you're thinking about something, say you're 18 to 25 years old, what do you really trust right now? I mean, fiat currency. We were just talking about the monetary policy and the history of money, like where are we headed? I would put everything into Bitcoin at that age, because it just makes sense to me. If you're, I just turned 40, so I do have a diversified approach. I have gold, silver, real estate, stocks, bonds, mutual funds, and I'm heavy crypto, but I have all those things. So a diversified approach is key. If you're a little bit older, you also have the challenge of, is my money going to outlast me, or am I going to outlast my money? Right. So like at some point you're in your golden years with inflation, dollar devaluation, currency crises, all the other things that you talk about and I talk about a lot. What am I going to do to hedge myself, protect myself against those elements? So it fits for everybody in every level. It's not a one size fits all strategy, but it's also not, I don't belong in the Bitcoin community. I think the Bitcoin community it's the people's currency. It's the democratization of money. And so everybody should have a little piece of this for sure.
Right. So I think the big question I'd like to answer it is what are the benefits of someone who has the ability to just go buy spot Bitcoin or spot crypto and hold it themselves versus using Bitcoin IRA?
2 words: tax advantage. It's that simple. So if you are putting money aside, you get a benefit from the government for putting it aside. They give you that. So if you made $100,000 and you put $8,000 aside, your tax bill, your taxable income has gone from 100 to 98. And there's also with SEPs, you can go up to $60,000. With solo Ks, you can go even further. So you're getting the advantage of putting money in because you're getting a tax break now. You're also getting the most important tax advantage is capital gains elimination. So if you bought Bitcoin and then you say, you know what, I want to put some SUI in, or I want to put some Ethereum in, or some XRP, whatever it might be, and you're doing all these trades. If you're doing those trades outside of an IRA, you're going to face a capital gains implication upwards of 25 to 30%. If you're inside of that umbrella of the IRA, that's that tax advantage, those 2 words, those go to 0. No capital gains implications when trading. And then when you get to the point of distribution, when you reach that ripe age of retirement, if you do it right, whether building a Roth to begin with or a mega backdoor Roth later, you've now eliminated your taxes for distribution. So it really comes down to tax advantage, for whether what's at the beginning, in the middle, or the end. This is a tool the government gave you, which they don't give us very many tools, right, Kyle? Like they usually take from us. This is a tool they gave us to save money for long-term retirement savings. And if you really believe in cryptocurrency, that Bitcoin is going to go to $1 million, Ethereum is going to go to 10, 20,000, XRP is going to go to $10, $15. All these different assets, if they're going to go the way you think they're going to go, there's no better place to be than a tax advantage place.
Yeah. And we did touch on this last time on the last interview, but for folks who haven't seen it, because there's been a lot of new subscribers since our last interview as well. So I think this is a really important thing to touch on for 2 reasons. One is, well, the topic is security, but for one, it's security and ease of use, right? Because if you're, a bit older, I mean, even for, people our age, 40 or older, it may not be so easy for them to understand how to download and, create these wallets and self-custody. And then even in the private groups that I exist in with very experienced, crypto OGs, they're still getting their wallets drained by clicking on, phishing links or bad links or whatever, and they're losing their crypto in there. For folks like my mom, she always waits until I go visit her to go practice, moving between Coinbase and her Trezor, for example, because she's, nervous of doing it. So I'm curious to know about the safety. Is there insurance? When people put essentially their retirement and their life savings in your guys' hands, how can they be sure that you guys don't get hacked or something like that? And then just also let's talk about safety and the ease of use.
Absolutely. So obviously, easy use is probably the easier challenge, right? Safety is the harder challenge. So I'll unpack that first. Right at the very beginning, we knew we were dealing with the holy grail of people's money. This is people's retirement savings, like your mom's, like my dad's, like my grandfather's. And if my mission is to help Americans retire, the last thing I can have happen is their wallet gets drained because they click on the wrong link, or because they get SIM swapped, or because their email gets hacked, right? So we have to think about these things in a security sense. So we are built in an ultimate exclusive cold storage setting, which means that while you'll be able to log in, ease of use, you can control your assets, you can buy, sell, swap, stake, and make yield, rebalance. We have all these tools. That's all sitting. There's the layer of the front end, and then there's the layer of the wallet, and there's another layer in between, which is the middleware, which keeps everything completely secure. So if somebody did hack your Bitcoin IRA account, which has happened, people have called us and said, "Hey, I got my email hacked or my SIM swapped." Their assets are safe because there's a layer of separation between the front end user interface and the actual back end security. Just like if you had an account at Brinks and you could log in to see, oh, I've got X number of ounces of gold sitting there. Nobody could actually move that gold out of your vault, and we built it under the same parameters. So cold storage to cold storage, settlements, savings, additional security. And when we did all this, and remember, we did this back 10 years ago, where everybody thought we were crazy. So you think ever an insurance company would say, hey, that sounds like a good idea, let's insure Bitcoin. We did such a good job over the last 10 years of building this that we now have a $250 million insurance policy per wallet, which is even higher than what you can get in other settings. And Coinbase and the other exchanges, they can't offer this because you are your greatest threat. You're the biggest weakness to your process. Like your mom and others have said, is like, well, I'm a little nervous about seed phrases, and I'm a little nervous about how the tracer works and these things. That's the element we had to simplify, and then we had to keep these layers of what I call the pentagon of custody. And it's not just the cold storage sits in the middle. So you see this nest egg behind me. Imagine that's your nest egg sitting at the center of the pentagon, and then there are 5 rings around the pentagon. And every one of those layers is a layer of security for you, whether it's cold storage, AI authentication, IP authentication, geographic authentication. We do actually, if you're moving assets out, which when you get to the age of distribution at your retirement, you start moving assets out, you can do that in kind. So you don't have to actually cash out for your crypto to dollars and take the money out. You can actually do it as in kind. We will have you on a call like this, where there's you and another person, we're authenticating you before any of those assets move. So security is a number one priority to us. It has been since day one. We still allocate over 30% of our quarterly technology and operational budgets to security to keep evolving, because it's ever more difficult to keep things safe. But that's the essence, is your nest egg is behind the pentagon of custody, but it doesn't limit you from ease of use either. So you asked about ease of use. I think some big things with ease of use is it's turnkey. You don't have to have some hardware device. You don't have to worry about, does somebody know what to do with that hardware device if I pass, right? Like you're probably in a good space, because when your mom passes at some point, it will happen, right? It's my mom's passed, my dad's getting old. At some point when they pass, you don't want to have them to worry about what am I supposed to do with this thing, this little device. You're actually able to set up your beneficiaries with your accounts. So that it's very easy for your kids or your grandkids or whoever to call in and say, hey, grandpa died, mom died, dad died, and I'm a beneficiary of the account. How do I get access? It's that quick. That's the turnkey solution that comes with it. So you get to rest in peace with a peace of mind that your assets, you worked really hard, you were ahead of the game, you built up this hedge against inflation and monetary policy that your grandkids and the next generations are going to be taken care of. That's turnkey underneath this beautiful security blanket that we built over the last decade.
Awesome. And what is this piece of SUI news that you're dangling overhead?
Okay, so you were going to ask me for a little bit of alpha that nobody knows about. So I've got a couple of things. Hold on, I wrote these things down. First, let me take a look here, because it's been a long interview. I know you'll cut this part out. Okay, so the policy for the U.S. government and across the globe is starting to become in favor of crypto, right? We just recently saw the SEC announce that there's an ETF expansion coming, right? There's probably going to be like 15 different coins that have ETFs. For us, behind the scenes, while that's great news for everybody, behind the scenes for us, we've got more staking, we've got more yield for non-staking assets, and we've got curated crypto bundles that we're working on.
Mhm.
And so for staking, I'm adding SUI as a stakeable asset in our platform by Halloween is my big announcement for you and your audience. So
Nice.
if you're interested in this and you want to do something, and hey, I'm a holder of SUI. I think it's a revolutionary asset. It's actually recovered nicely. I think it broke $4 yesterday or the last couple of days. You can now by Halloween you can put it in your retirement. You already can put it in your retirement, but you can take that and now stake and earn more SUI in a tax advantage setting for your long-term holdings, which I think is really powerful. And SUI is going to be part of a curated solution of different bundles that people can put together, because you do a great job educating people. But I find that everybody's like, oh, I just want to buy all the AI cryptos, or I want to buy all the blue chip cryptos, or I want to buy all these things. So we're working on curated bundles around that. And the last big thing that we're working on is the ability to make yield without staking. So remember, staking is POS only, right? Proof of stake. You've got XRP, you've got LTC, you've got BTC. All these you can't make staking assets with. So by the end of the year, come New Year's, expect some big announcements from us about how you're going to be able to make yield off of your assets securely, where they stay inside that Pentagon of custody and behind that insurance with those assets that are not stakeable.
Cool. So I just wanted to reiterate something you just talked about, just so it's clear to the audience. So another really cool feature is that you have access to this dashboard, the front end that you talked about. And in there, if people have a diversified basket of assets in their retirement account, let's say Sol and SUI and ETH, like they can stake those on the platform and in their retirement account generate yield, right?
Yes, and the yield is also tax advantaged. That's the big thing. So if you make if you own a bunch of ETH or SUI or otherwise, and you're staking outside of an IRA, that's a capital gains implication. You made a gain, you have to pay taxes at the end of the year for making that yield. If you do that inside of a retirement setting, that extra tax goes away.
Awesome. Chris, thanks so much for your time. It's been a pleasure.
Thanks for having me, Kyle. It's been a pleasure, buddy.